This submission is for the 2016 Fintech Competition. It's from EFC PLUS, the college funding solution. We're solving the student loan crisis. EFC PLUS is an innovative solution that helps students and parents focus on the financial outcome of a college education and make better college financial decisions. As you come into the homepage of EFC PLUS, we have a variety of options for you. To gather information, we need to calculate your EFC calculations. It's a 10-step process that is very user-friendly and takes the average person 25 to 40 minutes. They do it once in comparison to going to each school's net price calculator. A major difference to the tool is that we actually calculate your cash flows. So we ask the family how much money they have saved for college, how much can they afford per year. On each page, there's a help that's about 1 minute to 2 minutes long, and we have approximately 1,700 schools in the system based on their historical gifting policies. We also have security options that allow the parents to block the student from this personal financial information, but still allows them to see school choices that they are considering. A big advantage to the system is we do both EFC calculations in detail. This allows both the advisor and the parents to better understand their financial positioning based on their number. To properly create the strategy, you need to understand the 4 quadrants of both methodologies: parents' income, parents' assets, students' income, students' assets. This will be used in the future to help determine your financial aid positioning. Once you understand your financial aid positioning, your list of schools will then appear, helping you better understand how to pay for college. You then click on the hyperlink for each school, and you then click on the hyperlink for the school, and you get a dashboard for each college. It's a 3-part analysis for each school, custom to your financial positioning and cash flows. As you can see here, we have the cost of attendance, the net cost over the 4 years based on the financial aid positioning. Based on their budget, they'll need an additional $180,000. This is on a planning basis as they go through this process, projecting a debt monthly payment of $12. We also have an enrollment management matrix that helps parents better understand their financial aid and academic positioning at the school, helping with reducing the cost of college application. A major advantage to this system is we do a 4-year cash flow. So here we're projecting how the cost of this college is going to be over 4 years, and you can see the impact of the second child, and now the student will qualify for financial aid in their outer years. This helps you understand what you'll pay over the 4 year. No system currently does that. A major advantage, though, is not just the what, but how. That can be very different family to family based on their saving patterns. In this case, this family had $25,000. They could afford $10,000 per year, and you can see this is where the additional debt will be incurred by year for this family at this school. We summarize this information so the student and parent can now envision the financial outcome by going to this school. Another major advantage is that we also do the outcome focusing during the decision process. No system currently does that. By that, we are evaluating each school's award letter based on this student's academic position. As you can see here, Juniata College is almost the same cost as University of Pitt, and yet they have a $20,000 difference in gross cost. This is due to a scholarship this student received at that school. We get to that solution by entering in the student cost of attendance at that school that's custom and the scholarship that they received. You can see the addition of all the fields breaking up the award letter. The system then regenerates the cash flow on an actual basis due to what the student has received at that school. It will then recalculate the 4-year cash flow. As you can see, the debt is reduced substantially, and the $25,000 now spreads over 2 years, reducing this net cost of this college, making it much more affordable. After they make their college decision, it's also important that they understand how to track that and move towards a graduation date that's attainable. Our second part of the system, the college tracking tool, helps them do that much more efficiently. We regather the information based on their academic progress, update the information such as their budget and academic progress, and recalculate all the information as stated in the prior system. I'm going to skip here a few places due to time. We are then bringing in the actual loan data from the National Student Loan Database, so this will take in the incurred debt that's actually been incurred. And the system, the information that is not incurred within the National Federal Student Loan Database can be inputted. So if you have a home equity loan or a loan outside of the system, it can be added into the system so you can better see your total debt at graduation. We then help you project your graduation date and the cost and semesters needed to pay for it. and we regenerate the cash flows and projected award letters. We then summarize the information in one place so you can see here's the different types of loans, both on what has been incurred, what is projected to get to graduation. Again, this is the only system that brings both the federal and private loans together in one place. And then we generate all of the 8 different loan repayment options the student may have, including the student's debt that's outside of the federal programs. As you can see, they're listed there below. We then also allow the student to build a custom budget and see what a personal P&L looks like. So based on their graduation pay, taking out their taxes and seeing their net pay, and then depending on what student loan option they've picked above, it flows back to the system, and then you can build a personal budget. Hopefully make them much more aware of their financial future. In this case, we can see this is a warning sign to the student. They have a negative cash flow of $328 per month based on the living style that they've currently listed. This quick demo has helped you see the power and innovation that EFC Plus can bring to the college process. Our goal here is to help parents and students understand the financial commitment and outcome of their college. Our goal is to help and improve graduation time, since that is the best way to save money. My name is Fred Amrine. Thank you for your time. And if you need more information, please, this is my contact information. Have a great day.